Hi guys, welcome to my channel. Today we're going to overgo the Kadena protocol and whether or not my model predicts that this project will see price growth over time. If you're new to my channel, please check out my video, how this channel works. Okay, so this is the top-down view of the project. I don't like the governance. And these are the negative things. I don't like the governance. I don't like some of the token economics, like the inflation, supply, and that it's been in a bull market for a while. It does have a relatively low awareness. The team is excellent. And so, you could see that some of these things reach some uncertainty in the mid layer of the project. My final conclusion, I did buy a little bit, a small position, because I do expect this project to perform. The bottom line is the team is very smart finance people with good connections. They're from JP Morgan. They have a very unique approach, basically proof of work security. So proof of work is probably one of the most secure methods in the consensus models in cryptocurrency. So they use proof of work, but they actually have a scalable version, and we'll get into that. And it can handle so it could basically handle high amounts of volume on that proof of work consensus model. The cons, it has rapid inflation over the next 6 years, and the governance is not structured. It's got the miners are in control of it. Typical proof of work governance issues. So that's the issues I have with it. But once again, I did invest a small portion. All right, so the summary. What problem does this project currently solve? It has parallel blockchains on a proof of work framework. So it's a general purpose proof of work. That's like Ethereum, but this one's closer to Polkadot in its looking, in how it's structured. And Polkadot interchain operability, parallel chains, that is the future of blockchain. So it is right down that alley. It's a public and private hybrid blockchain, so that means that they could do large business transactions without the exposure to the general market. That's why you would want a private public hybrid blockchain. The private component being disguised or hidden, so that not everyone could see your bank account or whatever it is that you'll have in the future. All right, so 500,000 transactions have been proved on the network. And they're going to move it to 1 million transactions in their next major upgrade. They have human readable code that can, so it's easy for developers to program on. It's basically blockchain as a service. That's an easy way to think about it. Their goal is to go after decentralized finance, and they already have those partnerships. That's why I did put it as part of their current market. And they have something called Gas Station, which allows for programmers. This is a bullish thing as well. I will get to the ultimate, reason I invested in this, but Gas Station's one of those things that contributes to why I invested. It's basically just programmers putting up their gas for their users so that users don't have to pay the gas fees on this network. They'll just interact with the app and have the functionalities without having to even see the gas. So what problem will this project solve in the future? And is it valuable? Currently, it has 20 chains running in parallel. Soon they're going to add 50, which gives them that million transactions a second with proof of work level security. So it's going to be capable of handling 1 million transactions with Bitcoin level security. That's quite an amazing offer. And they are going to connect with Polkadot. So ultimately, these two reasons are the reasons I'm investing. I can see Gas Station making it allowing for users to. Well, the gas station means that businesses are going to have to buy tokens to supply it user fees. And so there's a lot of buy pressure right there, right? Because of the gas stations are going to be businesses buying their users' funds to allow them to operate without having to deal with gas. And connecting to the Polkadot is a must-have to be relevant, because that's going to give you interconnectability. And I could see this project being consulted on by projects in Polkadot for that high throughput and that security level. And so that's why I could see them being relevant, even though they have, some negative things. And does the team have the ability to perform? Yes, they do. They're JP Morgan and Chase, which in their blockchain department, they left their blockchain department there. JP Morgan manages 2.68 trillion. The team, I've seen them talents interviews. They're very smart people. Two mission critical components of any project for me to consider investing is the token used for services, and do they have a lot of room for growth? And they do. I highly suggest you guys check out this video on how they work. This is the name of the video, How Chain Webs Work, a simple animation. Or you could look up Kusama visualized on YouTube, and this will show you that their blockchain approach, and this is one of the reasons I invested as well. It's a very unique approach. I think they got something here, very smart team, something very practical, so go check that out. All right, so let's go ahead and go over. I do expect price to perform, even though there's going to be a lot of negative pressure from inflation. I do expect future increase in demand of the token. The current niche, so that, putting gas station up for programmers and so basically it's general purpose proof of work blockchain. So it has that high level security with scalability, and the gas station allowing for developers to pay for users' gas. So they don't even their users won't even have to see gas. So that means they can have easy to use programs, and that's already live. So they've already built that. And so yes, it is part of their current niche. Once again, gas station, general purpose proof of work. These are pretty much the same things. The niche is what they're currently serving, and the current niche expected growth is how much the thing they're currently serving is expecting to grow. So I'm going to get to the explanations at the end of the video. But yes, the token is used for services and governance. It's used for fees, and it'll also be used for, it's like Bitcoin. It's used for transaction. It's for throughput. The fees, the token is used to pay for fees on the network. It's to pay for the miners, as well as, so yeah, it's just paid to use services. The value of the target market is pretty massive. General purpose proof of work. That could be huge financial. The big financial instruments are going to be on highly secure blockchains. And proof of work like this, that's going to be a factor for, and that's what they're going for. These are financial people going after a financial market. So there's very likely that they're going for this huge, massive value transfers, and being the blockchain that will support that. I have a little bit of uncertainty for the future market excitement, and you'll see why we reached that conclusion. But let's go ahead and get into the awareness. There's little awareness. Their YouTube awareness is it's 65,000, but that was a slight mention on YouTuber channels, crypto YouTubers. Like Chico Crypto, I saw him mention it, and his channel is 65,000 people. But on other channels, it's about 2,000. So I think that they're relatively unknown from YouTube. Like his mention was very small. The team is only 1.4 thousand, and the project only has 7,000. So these are pretty low in general. Awareness on Twitter. The ability to acquire it is relatively easy. It's acquirable, but it's not everywhere. So it's on a Hotbit and Bittrex, so that's why I put it as yellow, not super hidden, not super difficult. You want to get those difficult to acquire projects. You want to make that effort, especially if they have good teams in good markets. So I put a current awareness is low, not much retail awareness. I would say that's true. Mainstream media type exposure, business exposure. So they are exposed because I saw them like on an MSNBC, those mainstream services for business. All right, so there's another note here, 1.2. Let me see if I need to check that out now. Oh, yeah. I'll get to that in the end. I'll do all of these notes at the end. Okay. Keep going. Money needed to move prices up. All of these are uncertainties. Okay, so the reason why you see this yellow going down here, is because they have very intense inflation over the next 5 years. It's very, very high. Like the team's release, all of that, the distribution's pretty awful. And so, so the way I see it, they have 400 million tokens to be released, and there's only 40 million available now. So that means that just whatever the current evaluation is, consider it 10x. So the current market cap is about 30 million. So think of it as 300 million. And you know what? That actually seems like a fair evaluation for this project. So it's not super overvalued, but the release of those tokens is pretty awful. So it's just a component to really consider. And once again, I'll get in the notes to the math and all that stuff at the end. But you could see about 400 million tokens by 2026. We have 40 million now. So there's expected to be 10x over the next 5 years. That's something to consider. And that's why I have this as being uncertain about like that. That's a lot of downward pressure. It's up 7x in 4 months, but it is up to a 30 million market cap, which is low. And the volume is very low. So actually, how much does something really go when the volume is super low? It's not as big as an impact because it's like a very few people who could acquire tokens at these very low prices. So when something's low volume, even though it might pump, it doesn't really mean that it's like a real pump, because it hardly any. There's not going to be a lot of people selling it for nothing because not a lot of people even got it for nothing because it's got a low volume. So at 32 million market cap, it's nice and low. Even though considering factors like this, you should probably think of it more as over 5 years. By the way, this is crypto, so 5 years. This whole space is probably going to be, I don't know, like trillions. So that is also a factor to consider. That's why I invested ultimately. It might be valued at 300 million, but given this token's unique approach, the team I think that the team set this up so that they can capture a lot of the value from this project. They're smart people, and they're not. I think that they're going to do the work and they're going to make a lot of money from that work, and they structured it so that they can walk away with a pretty nice amount of profit from their efforts. And you know what? That's the capitalistic world. If someone does that, if they give a lot of value, they deserve to take a lot of value, and I think that's what they're doing here. By the way they structured it. The miners do walk away with a lot, but mostly there's a big allocation to the development of this project, the connections, etc. So yeah, uncertainty with that sell side pressure. Okay. So I do expect tokens per person to drop. The gas station is one of the reasons I can expect that to happen. I feel like that's going to create upward pressure. Their gas station functionalities that they added. There is no fees for this. It does not burn tokens. So that doesn't contribute to anything. Project is easy to use. Their programming language is called Pact, and it is easy to use. You have that gas station thing once again. So it's basically designed to be easy for developers, and that's good. You want your ecosystem to thrive? Make things easy for developers, which is what they did. All right, let's get into the team. Will Martino, financial tech manager at JP Morgan. Stuart Popejoy, he's an executive director of new products division at JP Morgan. So these guys were part of JP Morgan's blockchain division, and they decided to make their own blockchain. Being part of JP Morgan is an impressive achievement because these, and they don't just hire anyone. There's a very you have to be very smart people to even get in there. So yeah, you have part of the team experiences Yale, SEC senior science advisors, algorithmic training, and program securities, and a lot of developers from the Quorum projects. So yeah, they have a lot of evidence of the ability to perform. So that means they have a good development team. Okay, so I don't as far as general purpose proof of work, I don't know of any competitors that have that ability. with 500,000 transactions a second. They're such a unique approach that I would say they have no competitors. And what's the reason? Again, even that's one of the reasons I did decide to invest, because they're very unique position. I do expect them, I think that there's a real possibility they'll have a strategic position in blockchain. And here it is. So part of their strategic partnerships, they have a large insurance company that they're under an NDA with. They've mentioned that they're working with a $3 billion asset manager. These guys have connections. They worked for JP Morgan. They're going to have those connections, and there's going to be more than just this. They're going to announce this $3 billion manager in September, so that's yet to be announced. That's likely to see some price movement from that. They're connected to Chainlink and Cosmos, but mostly Polkadot. So why I invested? Because I can see Polkadot is the ecosystem of Web3, and what's going to happen is a lot of these financial instruments might consult with this project because they'll be connected to one of these parachains. So this will be their project, and you have other projects over here, and they'll be, I want financial services. So they'll come over here, they'll get this high-level proof-of-work security with high throughput, and it'll feed back into the Polkadot system. So it'll be something consulted upon by anyone who connects to Polkadot. And I could see this being that service provider for that proof-of-work security. And that's why, one of the reasons I invested. So, protection from custodial exchange voting. The miners are in complete control of this. So yes, because the token is not used for voting. Miners vote with semi-interests of the chain. You can look at Bitcoin. It had huge scalability problems in the past that may or may not deter its future position in the market. Miners vote in their own interest. And when you give this level of control to miners, they're only going to represent their own interests. And that's what happens in systems. You have to consider the incentive models that run in the players involved in blockchains. Here, I'm going to get rid of this stuff because this is irrelevant. There is, all of this stuff is irrelevant for this. Okay, so yeah, the miners are going to represent their own interests, and I actually see that as a determinant. Miners choose version. So the way it works with proof of work, or even Bitcoin or any other chain like that, is you have a repository of code, different repositories, and the miners choose which one that they want to run for their software. And if one's not favorable, they can choose not to run it. And that's like a way of voting, because they're going to choose to run the software version that they like, that represents their interests. And so that's what gives them control of the code ultimately. And so let's say Bitcoin is running on this version of the code, and everyone who owns a version of this dies or loses their access keys. Well, someone would make a copy, and those miners, and they would start doing upgrades here, and the miners would start implementing this code. So in a way, that's voting. And so whatever percentage of the miners run that version is what that system will look like. So the miners choose the version. Token holders have no say. The token holders are not represented in. So, they don't necessarily vote in the interest of the price of the token. I think it's good for governance, at least for the price. We're talking about price here. It may not be healthy for the structure of the project overall to be so aggressively focused on price. But we're talking about price. And for that's not represented here because the token holders are not voters. So it's irrelevant for them. Parallel chains can have, so the miners can choose usually the miners choose the most respected, most supported code. But yes, it's up to miners. The governance represents the interest of the miners only. And that's why all of this is red. The governance is red. Only the miners. And that may or may not be interested in promoting this chain. Miners could switch between projects easily. There's services where miners flip-flop between who's paying the most, and they don't really care about the project. They only care about returns. So miners develop issues. You'll see similar issues. Right now, you won't see that because the team and their direct network and whoever else wants to jump on board as miners. But they're all going to be, since it's so small, they're all going to be on the same page. For this, I see that for the foreseeable future. But at any moment, if this takes off and you get a bunch of miners in control of it, they're going to only represent themselves, and so that long-term vision could be compromised. Token holders have no say in governance. Team must set up background method for verification for how they choose to implement those repositories, like what version control of the repository they're going to implement and who gets the keys and all of that. That's up to the team to set up, like what versions of the repositories in the check process and all that. So, it's just like a regular company in that sense. This part of it's like a regular company where the team decides the structure of how that code, that structure is going to be implemented. Just like in a regular business, how the procedures are going to be implemented. That's the same thing going on here. They don't have a really good mission statement, so I put yellow. They have unite, public, private, interoperable, high bandwidth computer. That's basically the summary of their so-called mission statements, but not really. So once again, high value upgrades. Bitcoin couldn't even decide to agree upon increasing the block size, so I think that that's a possibility with this. Simple, non-disputable upgrades that don't favor the miners will probably not go through. All right. However, I did put developer compensation will be good because the notes. I'll actually go over that right now. Okay, so the team has a lot of tokens. There's 18.2 million tokens that were on June 6th, and now there's 42 million tokens on August 30th. That's 84 days, and you saw it was supposed to be about a 27%. There was only supposed to be about 5 million generated, so what I'm guessing is the team's releasing their supply. You can see the details of their supply distribution. Actually, here's me talking about it, but you can see all the details in the sources provided. There's about 22 Kadena released per 30-second block. You can see I went to the actual code to observe this. So about 2 million in new coins a month. Token distribution, 200 million to the platform, which they various lockups within that. And so about a third of all tokens are held by the team, sales, either in lockup or held by them now. And over 120-year life span, there will be a 700 million released. This is the distribution of it. So there's no more than that. They said there's no more than 70 million that will be released by 2021. So that would be just that's we have about a year and a half for that to happen. So in a year and a half, the token supply will double. So I can definitely see this project getting ahead of the token supply. And this is over a 5-year period that hyperinflation will happen up to 400 million. But you can see right here the release schedule of this super high spike, and then it finally starts to plateau around the year 2026. To hold current prices, you need roughly a 300 cap, but also consider this is 6 years. So in 6 years, yeah, that's bullish, because I do think that 300 million for this project over 6 years. So yes, you can say this project is very bullish over 6 years. At some point, I do expect this project to have a bull run, but you might want to consider not hodling this one because of this release. So if it gets that bull run, you want to offload. And we'll go into other notes. In September, one of the reasons that this could be bullish in the future is they're going to have a public disclosure of that $3 billion fund partner. They're going to show full integration with Coinbase Rosetta API. That means it could be on Coinbase or back-end Coinbase interoptions. And they're going to have a new DeFi partnership, possibly Polkadot, which would be the prime time to connect with Polkadot. Future marketing, they're going after the expected partners, finance partners. They're all financial people. They have those connections. coming from JP Morgan. They're insiders, guys. All right, so developer motivation, likely to be like employees. You can see from my notes that the team has a decent amount of coins. Some various levels of lockup. You have to find that in my sources. But once again, in the long run, I see, I see that them having relatively, employee type developer situation, or the business is running like one of those parallel chains. So yes, you could run your parallel chain and fund yourself and run your own project on this. But the actual developers working on this, there's plenty of funds available that they're releasing over time to fund that development. Value of service provided, I do expect it to go up because of that developer motivation, because the team has so many tokens. So I expect them to have big business partners. They're insiders. They have those connections. And one of the other reasons to be bullish about this project is if you're going after financial services, you cannot have a $1 trillion asset on your blockchain and your blockchain be 300 million. Your blockchain has to be valued relatively higher than the services or than the value on it, because its security comes from the value of its market cap. So you cannot have higher instruments on your blockchain, because that creates a greater incentive to break it, so to speak, than the market cap of the project. So yes, going after financial services is very bullish for this project's potential market cap. So I do expect that business demand. All right, so I went over all this. All right, guys, that's the overview of this project. And I do think it's a very unique project. Despite having awful inflationary forces and awful release schedule, they do have an excellent team. And this unique approach and having that secure layer of proof of work ultimately led to me taking a small position in this project.